Okay, now there's sound. Thanks, guys. I'm sorry. This is okay. Here we go. So we're gonna redo this. Um, we're gonna redo this again. I apologize, just so you guys know. For some reason, the live stream didn't start. I was going at it, and you guys weren't there, and I didn't know it. So I apologize again. So let's kick this off. We're gonna go through the S&P real quick. So we'll just run, and we'll do an hour from here. Um, so we are hearing sound now, right, guys? Okay, awesome. Thank you. So yeah, um, I've got some associates that are going to be telling me about some of your questions and stuff, so I don't get distracted by the timeline. So let's kick off and look at the S&P. And one of the things that is happening here is we continue to see these PPMs like trail off and start to lose momentum. And this pattern is very close to stalling and declining back toward somewhere between the 2740 and uh, around 2711. The extreme right now is 2673 to 2650 is the possibilities on the downside. And there's a couple things happening here. I always talk about my PPMs, and just so you folks understand what's going on there with the PPMs is that the anything over 0.27 on these numbers on the far left here is a trend mode, and we're looking at a plus 0.27 right now and a 0.36 on ppm 1 and 2. But the issue is that we're seeing them cross to their first and second derivatives, which is a warning signal telling us that there is some softness is going to start to come into this market from the standpoint of the momentum is just dropping off the map right now. And if we drop below 0.15 on ppm1, I'll cover this on the nightly videos, but we start to drop below those levels there. What that's going to tell us is we're going to challenge the 21 period moving average, 28.22, this cash market we're looking at right now, 28.22, and then potentially go down toward the 40. And let me draw in a couple patterns here that I think are important to take a look at here. So one of the things I've been talking about here is this pattern that's unfolded up to this high where we spiked out last week at 29.56 and change, I believe is the number. And it looks like it was a 5-wave pattern. And what we're likely to be doing here is a 1-2 here and then a wave 3. And this entire pattern here, hang on. This entire pattern is actually setting up as a big, this entire pattern is setting up as a possible 1-2, and it could be a very bullish pattern that's setting up. It's still going to take another 5 or 6 days for it to set up, but it's possible. I'm just looking at we have such a disconnect between the real world, Main Street and Wall Street, and how things are trading, and the whole pattern is setting up as a very bullish pattern, but we should still see some weakness. And based on the patterns that we're going to see over the next several days is going to tell us how deep a correction is going to happen. But there's right now about a 60% probability that we will see this decline off this pattern here. Today's close is going to be pretty important. We closed under 27.56. If you guys follow me on Twitter, a couple hours ago, I tweeted that the support was 29.56 and 28.56.50. The low of the day was 28.56.98. So we went right to that number and bounced off of it. So there is there is stability down at these numbers, but I think it's weakening, and that's what these PPMs down sloping like you're seeing. You can see PPM2 down here below is actually turned over, and everything's just starting to kind of drop off the map here. Even though we're still in trend mode, it's starting to show that the trend, the underlying trend, is weakening. And you'll hear me talk about a lot of things over the course of watching the channel and just watching my work flow day to day, is that the probability map is always changing. And what we're seeing now is probabilities are increasing that there's going to be a decline, like what I've got set up here. Now, if this overall pattern ends up to be that we had 5 waves up and we're going to get an ABC, there's 2 patterns. If any of you have entered into watching any Elliott Wave stuff, there's a lot of really terrible Elliott Wave work that's done out on the internet. Everybody thinks everything's 1, 2, 3 and ABCs. There's something that we get into here that is important to understand when we get into these patterns. I'm going to slide this over just so I can draw in some more. This is going to be a quick lesson, okay? But here's what the pattern. There's 2 patterns that can unfold here. So if this is a 5-wave pattern here, and we've got 5 up here, then there's 2 things that happen. There's a rule in Elliott Wave called the rule of alternation. And the rule of alternation simply says if the previous corrective phase was simple, then the next corrective phase will be complex, meaning it will last a lot longer than the previous. So I'm going to remove these and I'm going to show you exactly what I'm talking about. So we had 1 up. We literally had a little ABC here. It was a simple correction. So now we get up to this wave 4 and then we got wave 5. So if this one right here was simple, then this one is going to look more like something like this. And then you get into some kind of sideways band. And I've been talking about this for a while. The PPMs down below absolutely tell us that there's some weakness coming, but there's major support down here at the 2750 to 2650 on a broad sense right now. And what that tells us is that we're going to be trading in a trading range. So if you guys are trading options, you know, up at these higher levels, there's a pretty low risk level to put some puts on here to try to trade the low end of the range. Also, you can do some straddles in here. I'm a former market maker, option market maker from Pacific Options Exchange back in the 90s. And, you know, you can start to put straddles on, some those kind of trades on during these periods of time, because you're just going to see some of the puts will work, but you're going to see monster, actually just see premium decay big time in these kind of markets, even though with the volatility levels we've got kicked up, even with the VIX at 32 continuing to decline here, it doesn't bode well for massive decay of premium, but there is some pretty good strategies that you're going to be able to put in here. So, but just some thoughts on some trading here. But this pattern I'm talking about is the first pattern over here. I'll draw another arrow down. This was simple. This one should be complex. The probabilities of it just going straight up from here are pretty low. It's certainly anything's possible in the world of markets, but the configuration looks like it's set up pretty good. Let's take a look. Let's go over to the intermediate graph and just look at the weekly. Just one quick comment before I move on. I put this Fibonacci grid from the retracements, everything that is happening. We are trading, this market's trading almost exactly within this grid, and I still expect it to do so. So you look at 0.618, 29.32, we printed 29.56 last week. The low that we had 2 days ago was right spot on the 21 period moving average, also right at the 27.91 50% line, and and the next thing that should happen is we should come down and challenge this 0.38 line. And there is way down here at 2300. Some folks are talking about there's a gap down there. It could be filled, but maybe not for a while. I'm not really hung up on the idea that that's going to get filled right now, just with the basis of the configuration. So let's take a look at the weekly graph. And just since you guys didn't hear my original opening, I'm going to go through and unpack the S&P for first. I'm going to talk a little bit about the Nasdaq, what's going on there. We're going to look at gold, crude oil. Then I'm going to do the airlines that I talked about a couple nights ago, and then we're going to open up the questions. And since we got started late, you guys want to hang out, we'll just hang out and get a good solid hour. And I apologize again for the little snafu at the beginning. But let's take a look at the weekly here, and just see what's this same pattern. The grid is still there, but this is going to be the key elements as far as it's going to be the key elements here is this grid, but this 10-week moving average is this ppm tracks that. It went from minus 2.5% to flattening out. It's also taken out its first and second derivative. ppm2 down here is taking out its first derivative, and ppm3 down at the very bottom is taking out its first derivative. These are signs that this market is bottoming. Now, it may just be a consolidation and then another leg down, but for now it is bottoming, suggesting that, once again, these are the cluster of numbers. When you're watching my work, I always look for a clustering of numbers, and we're looking at a cluster around at 27 on the downside, 27.75 down to, you can see here that where I drew the arrow, that is the 27.22 is that moving average value. We've also got 26.64, 200-week moving average. 26.64 is 0.382. I mean, these numbers are all so amazingly related. I've never seen a more perfect grid setup than what we're seeing right now. It's quite fascinating. I've been looking at these charts for 40 years and doing Elliott Wave and Fibonacci work since about 1982, 83, so long time. And this is just an amazing setup in a grid. And ultimately I still think we could see that larger ABC. If you folks have been watching my channel, we could still see that ABC pattern that I've been talking about, which would set up something like this. And we end up with this broad trading range. And certainly from an economic viewpoint, that would make total sense. That's where we would end up, is that we would just wait for the uncertainty to unfold, see how the economy comes back online, see what people are willing to do again. This is, to say that I've never seen anything like this before would be stupid, because no one's ever seen anything like this before. And of all the market scenarios that I've seen in my life, going all the way back into when I started in 1979, nothing looks like this and acts like this. So I don't like to compare the past with the current, because usually they have very little relevance. We've never seen government step in, and the Fed spent what, close to $3 trillion. The fiscal stimulus at 2.2 plus. Never seen anything like this before. So the impacts of this are something that's going to be quite interesting to watch, because you're not going to be able to predict what this goes on. So you can't go and compare this to 1930, because it's not 1930. It's not 2020. And in 1930, they didn't have the ability to move money around in seconds, and shift money in the economy and do the things they could do back then. Now, they were still writing checks back in those days. And so the speed at which money can move and change is going to affect the outcome of this situation. And certainly if we get back to work and we don't have any more craziness with the virus blowing up, or, second round. I know a lot of, there's all kinds of theories. None of us are doctors. We all have our opinions. But the bottom line is this pattern that I have up here tells us there's uncertainty. There's likely a pattern of uncertainty to continue. And we'll have to watch step by step and watch this stuff. Now, I'm fortunate that most of you people that look at, this is TradeStation that you're looking at right now, and I've been a TradeStation user, and in fact, I coined the phrase. I was the very first solution provider at TradeStation in 1992. They actually have some of my user studies that I built are in this platform way back when. But I may bring up our software. I actually have built 3 different software platforms that have managed around $300 billion over the last 20 years. And so everything that I'm going to talk to you about on the channel, everything I'm going to be telling you about when I'm making analysis has to do with a lot of experience, but also the math and the numbers behind it. So that's why this patterns that I draw in here and the things I talk about are like they are. So let's take a look just quickly. Let's look at the Nasdaq futures. I just want to look at the dailies on that, because this is pretty phenomenal. But it's certainly been the strong market of everything. But we are also setting up a potential right shoulder here. This thing, it's traded 90-30. I've watched this thing trade. It was only up about 50 handles earlier, and it rebounded. But I want you to notice that it bounced right off of the 10 period moving average here. Again, this is your driving force. And once again, just continue to try to bring you folks into my world. And so you can see over on the far left here, this 0.44, this is a plus 0.44, 0.55, and a plus 0.21. So this entire sequence that we're seeing here has huge underlying support. The probabilities right now of the Nasdaq collapsing and going down is about 15-20%. It's very, very low. So the Nasdaq is going to be the light in the sky, we'll say, primarily because we know what's going on here. All the tech companies are going to survive. They don't have storefronts being shut down. People are sitting at home using more of this stuff, so it makes sense what's going on here. The other thing that we've seen as far as markets go, we have this 200 week. This is the 200-day moving average. We can't get above it yet on the S&P, but meanwhile we've been trading above this for the last 3 weeks on the Nasdaq. And like I said, this seems to make sense. I try to do what I call a reverse fundamental viewpoint. Like if the technicals are saying this, then what would be the backdrop? What could make that happen? And this is how I've run my work for a lot of years. I've been head financial technician, major firms, worked in Merrill Lynch research. I've been an institutional rep. I've got a lot of experience of watching this stuff and making these calls. But all of this stuff that you're going to see is absolutely just from the experience of watching how these moving average work, but also looking at these PPMs, and then the models themselves have about 600 variables that they look at and they evaluate every day. We have our primary software platform. We run over 10.5 million calculations every day on the markets. And so I have the benefit of looking at not just at indexes, but looking at 16,500 symbols. And that's why if you watch the channel, you'll see that I go through the database and what the configuration is, number of buys and sells, percent bullish. That gives me a perspective of what of what's going on internally in the markets, not just looking at an index and going the S&P is doing this and that. There's on an intermediate basis, we still haven't gotten a lot of traction. We're starting to see some come in, but we're still only at about 12% long. On the dailies, we pushed up to 62%, and I mentioned this last night. I don't think I have it up on the screen, but basically when the short-term database gets between 62 and about 74% bullish, is usually about where the markets will peak out. It's like anything else. It's like a overbought, oversold type situation. You start to get so much of the database long, you start to see a rotation. So the early stocks that came on will rotate out, and then everything else will, the newer ideas or newer signals will work. Some don't. It gets into a rotation. So we're coming into that rotation phase on this trend. So it makes sense to me that we're likely to see the potential for this little sideways pattern to set up and still consolidate. Because when you look at the Nasdaq here, you look at the S&P and all these indexes, they're pretty much doing the same thing. The relative strength is definitely on the Nasdaq side, but when you look at the other indexes, as you go through and go down, you start to look at the Russell and the small cap and mid cap indices. They're just terrible. So I'm getting a little deeper in this, but I do want to. That's part of the goal here. Is I try to do my videos between, sometimes they're 8 to 14 minutes, and I try to keep it pretty concise. So this gives me opportunity to do stuff. Let's do 2 more real quick markets. I won't get too deep, but I do want to talk about them. I want to take a look at gold. That's of interest of a lot of folks. Then I'm going to go through the airline stocks that I covered a couple of days ago. I talked about gold last night, and I talked about gold last night, that it was looking a little weak. Same thing that I want you folks to tie this together. You've been watching for a little bit. Is the same thing happens with these PPMs all the time. These things are amazing. Now this is my lifeblood since 1984. So I live and die by these indicators, and I know how to read them, and I try to give you that perspective, and that's why I'm doing these live streams, so you can actually get a really good feel for what these things are. Let's take a look here. So I made the comment in last night's commentary that these PPMs were showing a lot of weakness. Therefore, I thought we could see the gold go back to around 1658, which is back to this 40-period moving average. It looks like that's where we're heading. 1687, down 23, down 1.36%. All kinds of gold bugs out there. I saw, I'm trying to remember this guy's name, Jim Rickert. He's talking about $14,000 on gold. Buy now. I'm pretty bullish long term on gold yet. I don't know about 14,000. That's a little far out for me, but the patterns is set up. I'm just going to run through this just very quickly. We're going to look at weekly, and you'll see a little bigger pattern. But this is a very unorthodox pattern, folks. This is not a bullish pattern. This tells us that, when you start to see, let me just explain my comment here. When these type of movements that I'm drawing in right now, these are very orthodox movements. And all of a sudden, you get into this mess that we're seeing here, where it's just this, the bars, the configuration just doesn't look normal. When you start to see those things on markets, what that really is telling you is that something's different. The activity in the markets are different. We know about the high volatility that we've seen over the last month and a half, but this is not a pattern that typically will just blow out of here. And we're seeing the same kind of weakness now. The PPM1 is at a plus 0.71, which is this moving average right here, and that's going to be your support. Guess what? 1656. This is 58 on the dailies, 56 here. These are big numbers. Let's go over and take a look at the monthly real quick. This monthly chart is definitely bullish. Strange patterns, like I said. We have a secular buy over here where we looks like we got a buy here on a monthly on the beginning of June. So we're in a secular buy right now. So as far as the pattern goes, we're PPM, so we're in the far left over here, plus 150, plus 1.42, and plus 0.68. This is a very long-term and sustainable rally. We're certainly 1850 to 2000 is very likely. So there's a good trade here. I don't know how to come up with a 14,000 number. I don't know how to do that stuff. The patterns may evolve. I'll follow the market. I'm a trend follower, Elliottician, and I have a high level, a degree of understanding of moving averages and configuration. I'm also a bar counter. If I was in a casino, I'd be barred for counting cards. So what we're seeing here is a very bullish pattern. So higher prices, absolutely. Right now, probably not. Probably another decline back toward that 1650, and then we can judge it from there to see if momentum starts to fall out of some of that support. Okay, last market, then I'm going to do airlines. So we got crude oil, and this, I believe, May 19th is the next expiration. They blew up a couple of ETNs and ETFs on that June contract going minus 40. I realized that, man, if you were willing to take a risk of delivery, if you'd have bought minus 40, the next day it was a plus 10. I've been meaning to figure out what that returns would have been. But but this pattern here on a monthly basis just tells us this market is going to stay. This market's just going to stay in a range. It's probably 15 to 25, maybe 30, and it's just going to trade in this range. It's going to stabilize. You know, we are going to start driving cars. We are going to start traveling again. All these things are going to start to happen again. So this market probably belongs back at the 30, 35 level once the economy comes back in, demand comes back in. I talked a lot over several weeks ago, and when the crisis was just kind of unfolding, what we really saw was the craziness of how everything got shut down, and you know, it was easy to be this super bear in the end of the world scenario, and that's what we saw in this crude oil. Nothing's ever going to work again. And this is, you know, this market is really at the crux of demand. So this will be a really important market to keep an eye on and watch how it trades. Now, from the moving average standpoint, we're looking at minus 0.72, minus 0.4, and a minus 0.154. And what that tells us is we are months away from this thing bottoming and having any probability at all of sustaining any kind of rally. We're locked in a downside range. Probably that last month's range is the extreme there, 39.47 to 10.78 on this contract. Of course, these things roll every month, but the bottom line is this market's not going anywhere. But we are going to be able to see on a short-term basis. We're going to be able to see, you know, some of the movement when it comes to you know, some type of pattern. So we're looking at a daily chart here. This thing's just going to be, you see the 40 period at 30, we're at 21. That's that. So, okay, let's go. I'm going to just run through some of these patterns that are important. I just kind of glanced at some of the things. This thing will be, there'll be a replay on this when we finish today, so you can go back and look at my S&P comments. I see Sergey just asked a question there, so that's, you know, um, that would be the best and way to find out. So in the next hour or so, you can get all that. All right, so let's go over and let's take a look at some airlines. And you know, we're still seeing some downward pressure here. This has, I've left the models on here. So this model actually bought into that little bounce up. It's not really not working. This was not one of my preferred. My favorite one was Hawaiian Airlines. I love the pattern on this one. Because I have this thing has already had, this model that I have on this stock is our aggressive model. It's already had 2 trades in here and they've been 2 losers. So third time's a charm. Typically what you'll see in this kind of model, you'll get 1 or 2 trades like this. The next trade that comes out of this thing will be good. These stocks will bounce. They are going to come up. And I get a lot of people tell me how brilliant Warren Buffett is. Well, brilliant people don't drop 50 billion on a trade. And, you know, it's just, you know, he's very concentrated. It's funny, if you listen to Warren Buffett, he'll tell you to diversify, and he's made all of his money by concentration. And that's something that I teach a lot of our investment advisors to think like, is it's concentration with a good strategy will make you a lot more money than diversification. One of my mentors used to always say, diversification was the fastest way to moderate gains and moderate losses he knows. And in this world with the volatility we have, it's the fastest way to moderate gains and big losses that I know, because everything becomes correlated in these big drops like we've seen. So diversification works, and some windows of time when things are somewhat normal, and other times you have to be much more aggressive. So let's move on and let's take a look at, let's do Alaska. This one is still, this is interesting. We got a model buy back over here. We got a model buy on the 7th. There's several of these things that came in on April 7th. So once again, all of these patterns that you're going to see look very they're similar but slightly different. But this is a basing period. These things are going to pop out of here. So when I did this review, I wasn't talking about some bull market and airline stocks, even though that's possible. What I'm really looking at is this pattern, that's setting up here, and we're going to see a pop out of here. We're going to see 20-40%. Some of these stocks are, you know, this one's not going to, it's not going to double in price, but you know, you only have to get back to 30 on this stock, to 35 to make a really good trade. So these are probably option trades if you're trying to come into these things, or you know, that's probably the best way to trade some of these. Let's go to let's look at American. American's still underwater. This was not one of my preferred trades. We got up to this resistance. We're trading at these low levels. But once again, this is kind of a flat that's setting up. And the PPMs are breaking, or at least PPM 2 is broken through its first, second derivative. And PPM 1 is trying. It'll take very little strength to turn this market. So this is definitely a cheapie from, you know, this is like some of the trades that you've seen in like General Electric and things like that, where there's just super cheap trades and you can make some big percentages on $2 and $3 moves on these stocks. So we'll get back to 1050, maybe 1050 to about 1120. Get back into these moving averages. PPMs are PPM 1's turning up, PPM 2's positive. Let's just keep barreling through these delta. So same thing here. We got a buy on 420. It's underwater. So 2 days ago when I did this video on these things, we were down here. We're still trading in that range. Like I said, I just see these things popping out of here, and if I'm correct, if Warren Buffett was the seller in April, he was the guy hammering his stuff down, then that big seller is out of the market. So now we do need to see, once the economy starts to come back and we start to see capacity. I don't know if you folks saw the video I did a couple of weeks ago where I showed and I'm sure you've seen them out there, but these airports and places where they parked just tens and thousands of airplanes. It's just a bizarre scene. These planes will start to come out. I don't know if they're going to do like the restaurants where you have to have. I think Delta came up with something that they're going to leave the middle seats open. I don't know. Yeah. Anyway, so we'll see. That'll put them at 60% capacity. They won't ever be full at that level because basically a third of the plane's going to be empty. So anyway, let's look at probably the worst stock out there. I was talking to someone yesterday, is Southwest. There's something wrong here. I don't know what's going on with Southwest, but they've got some serious issue. You can see they're trading down here at 2503. Actually, the model went long and actually sold out on the open today. So this has just been this terrible pattern. Probably the next buy, though, is going to be a good one. But so what I will do, since I've opened this box on these stocks, I will continue to mention when I see some buy-ins that I like, I will mention these in my daily commentary. So let's go. Let's look at Spirit. So Spirit, same. These patterns all look the same. You get this this flat line. I'm going to draw this one. We'll use this one as an example. So these drew that a little high. This pattern is, we're just etching out this pattern here, and at some stage we're gonna come out of this pattern, and you're gonna see a move on this stock from 11 to 17, or retest this high, little high we had. There's going to be some really good trades in here, and like I said, that's why I brought it up. I love I have a lot of I spent a lot of years on the trading floors, and I've seen some guys blow up in the pit and just puke out stocks at the bottom, and that's exactly what Buffett's doing. I heard that there was because of all the stimulus and everything that they're doing, Buffett's always been the guy to show up like at Goldman Sachs and Bank of America in 2008 because he had a bunch of cash on the books to buy some bonds. Well, rumor is he didn't get offered anything, so he just bailed on these stocks. We'll see. We'll never know that real story, but some folks that I know are suggesting that was the case. That munition and Secretary of Treasury actually just they said no, we don't have any deals for you, and so but anyway, we'll see. But these stocks are not going to die. I still think there's going to be support. Whether you think Warren Buffett's a genius or not, that's neither here or there. I haven't liked the guy for a long time, but that's just me. Anyway, let's go to. I want to show you something, and then we're going to move on, and we're going to go to questions. I want you to see. This is interesting because. Hang on, I did not get the right symbol up here. So yeah, this is China Airlines. They're all. It doesn't matter where these airlines are; they all look the same. You can see the PPMs are deteriorating here again, but this is all this big basing pattern. And when you're looking at stocks, especially a stock that got crushed like this is what you want to look for, folks. When we put out a headline, to take advantage of that, doesn't mean you jump in and buy all these stocks. What it is this is a place to start to look at some of these stocks. We had some tremendous buys on a lot of symbols over. I think we're around. I think 10 or 12,000 symbols are long out of our 16,000 database now, and so it's a very very big number, and there's been some substantial trades off of it on a short-term basis, and so but these stocks are interesting. Yeah, so okay, let's do this. Let's go to some questions. Uh, Yeah, so okay, George, why purchase airlines if we have the potential for the market to turn back in the next few days? The answer is don't. That's a good question because what I'm telling you is not to buy them here, but to watch for these buys. And I'm going to put out when our models come back in on some of these stocks. I'm going to put them out. One of the I didn't put up here is HA, which is Hawaiian Air. See, it's retraced as well. It had a nice little pop, had a reversal, but this thing is stable. We're staying above the moving averages, and I like what's happening here. But these stocks are not necessarily a buy today, but they are something to be keeping an eye on for an opportunity because there will be an opportunity. You guys will remember me saying this, going, "Oh yeah, that was that." Let me see here. Um, okay, so let me look at a couple other questions here. Air Canada. I don't know the symbol. I wish I did. If you uh, if you want to throw a symbol on the timeline, I'll cover it. I covered HA. Wyckoff patterns. One of my old associates was a big Wyckoff guy. I never delved into that. Um, Yeah, so what are the expected timeline range in these airline trades? There's this next little pattern. When this thing bottoms here, I will cover these. I'll watch these stocks pretty closely, and I just watch the daily videos so you'll get a good feel for what's going on there. I will put things out if I see them. Okay, but this basing period, if you're doing some of your own technical work and you see some patterns set up, then I would definitely be looking because the, these patterns, like I said, a stock like this, 11 to 18, 20 is going to be a no-brainer. This thing will run back toward their 200-day moving average at some stage. It's just a matter of the timing of when to put them in, if you're buying stock or whether you're playing options or how you're playing this thing. Most people think just being an ex-option maker, option market maker, most people think options are to give you time. Time is your enemy on options. So timing is just as critical in trading options as it is um, with individual stocks. My favorite line with options is the good news is you can only lose all your money. They can expire worthless. Where in futures you can lose more than all your money. So that's the good thing about options. But options are timing is critical, and that's why if you talk to professional traders that do a lot of trading, they're not going to buy outright options. They're going to do straddles. They're going to, do some. They're going to have um, time spreads or some kind of short time. So they take advantage of the time decay while they are waiting. That is the way to trade options, not just outright buy. If you just buy premium, premium decays every day, especially out of the money. Every day it goes by, you lose money. One of my a guy that I used to trade with on the floor used to always come in on Friday night and sing the song, "You Can Pay Me Now or You Can Pay Me Later," that he made up because he would be short all kinds of premium. And even though the markets were open on closed on the weekend, uh, he would go, he'd go, guys, he'd go, well, I'm mowing my grass this weekend. I'm going to make 80K on time decay when I come in Monday morning. So that's why you'll see options. If you're an option trader, you'll see them close at a price, and on Monday the stock comes in unchanged and the option's down. That's time decay. And and sometimes if the stock's down, you'll get it'll even be exaggerated. So those are just things as you're trading and doing things out there to know. But the timing is not yet, but I will put this out. I'll watch these stocks pretty close. I actually built a portfolio. Um, um, I built a portfolio in our software, so these signals when they come out, that I'll be able to alert them, and in fact I'll bring that our software up when that happens on daily on my daily commentary that we're doing. Um, yeah, somebody said Tesla. Let's see here. Let's take a look at let's look at Tesla. Yeah, so Tesla's an interesting story. Um, we've got huge underlying trends on here. Let me draw in some things here for you. Uh, here's that's a five-way pattern, so we're probably into some kind of ABC. This going to be a range bound type situation. You can see also PPMs are trying to turn down. Typically, you'll see these PPMs continue to decline. Maybe this is a zero line here, and let's see where this is. It's getting closer to 0.65, somewhere in here. It's not on the scale, but somewhere down here, and so this is a scenario. Everything that I'm looking at on the screen when I go through lots of stocks and looking at patterns, they all look similar. We're all getting this right shoulder set up right here, and the prices, the spike that we did last week is going to be incredibly important, and I suspect that it will hold, and that'll be the patterns on that will continue to present itself. And what I've drawn in here is what's likely to happen on for Tesla. Um, yeah, I like the comment uh, from somebody who said, "Don't short Tesla unless you're the best trader in the world." Uh, probably true. Although this was a pretty good short, you didn't have to be that good. Uh, but when the crisis happened, if you got on this thing early, there was a lot of opportunity on the short side. We all know that. Hindsight's 2020. Um, our model actually bought and sold right here. Uh, it took a couple days. It took about 4 or 5 days to get a signal. Momentum was still spiking down here. You can see this spike, and I'll draw a line up so you can actually see how this lines up when this spike happens. The way to look at momentum. This is another quick lesson. The way to look at momentum when you see momentum indicators and they spike up. I don't like stochastics and what I call 0 to 100 meters relative strength, those type of indicators, because what happens is they get to a high level and they just start to go sideways and they give you divergences, and everybody talks about them being overbought. These indicators here measure the directional movement or the percent change in the moving averages, not the daily change of the market, not from close to close, or over a period. It's measuring the actual moving averages. So out of that, what depending on what the moving average, what the ppm value is, tells me what the probabilities of the market to decline below or hold that average. And the original work I did back in the early 1980s, what we were trying to do is determine, everybody was using moving averages, but we wanted to determine when a moving average was a valid trend line, when it was going to hold and when it was going to break. And we figured out that if we could figure that out, then we knew exactly what to do, even to buy against or to sell when they break, and how to get some momentum. And that's what these ppms were all about. So let me just draw one last thing here. Yeah, so I said that this pattern here, this was no doubt a climactic period. So, but this slope of this average right here is currently at 1.80. This is a daily, so it's going to take a minimum of 5 to 6 days. So that support line, 715, it's rising every day on Tesla. So it's probably going to move up toward that 750, 760 level. If this high holds, we set up a right shoulder in here, then you should get a decline at some point. So that I think that's we'll move on. Let's see what else we got out there. Yeah, somebody had a question about Head and Shoulders movement. I'm not a big fan of Head and Shoulders. I guess they exist. Um, I always joke I've only seen 2 Head and Shoulders patterns in my life. Um, but yeah, so, and I get that they set up. I just look at things a little bit different. And one of the things um, I just want to put out there to you folks, when you're learning how to trade, you're going to pick up patterns. I'm not a one-trick pony, but I have developed about 3 basic places where I buy, and there's about 5 different exit patterns that I've recognized, and it takes a long time to figure out how to trade. There's people in our industry that go and get a CMT, which is Certified Market Technician, which makes me gag when I hear it. And the only reason why I say that is it's a cookie cutter. It's like they think you can go study some stuff, watch a few charts, and you figure it out. It takes a lot of years, folks, to learn how to read this stuff. I joke that it's like reading tea leaves, but you've got to see a lot of tea leaves. I've been watching. I think I figured out that out of since 1979, I've been in front of a ticker virtually trading day. I don't know how many thousands of hours I've watched ticks happen on the screen. And, it takes a lot. I used to joke it when I was handling customer money back in the early days, learning how to trade. It takes about $1 million of mistakes to figure out how to actually trade. And that's just part of it. Yeah, somebody just asked about Facebook, so I'm just kind of filling time here. Let's do Facebook. I actually haven't looked at Facebook for a while. Yeah. So, yeah, this is one of those trades right here on 326. It was the same time we got the buy in the S&P. This thing is still long. Our models are still long it's actually from this close. So we're long 156.21, and this thing's screaming. PPM's off the map, 1.47, 1.17, 1.47. I mean, like I said when we were talking about the Nasdaq earlier, really what we're seeing here in these tech stocks are leading because everybody's sitting home. They're on Facebook. We know the story, right? you're not going to stores. That airlines are an obvious story. You know, there's a lot of stories out there. Retailers and all those guys are all the same. We can bring up Amazon. We know what that looks like, right? So, but this is a very bullish pattern. This looks like an extended third wave. Let me draw it in just to cover this properly. I'll do two things. We'll take a look at this stock, and then chances are this was probably where right here was the top of one. This is an ABC pattern here, and it is possible, another Elliott lesson here, that a B wave can make a new high from an A, and it's called a running correction. But what's interesting here, I'm just going to draw these patterns in, and this thing is so bullish, it's unbelievable. It may consolidate up here, but this is not the top of this pattern at all. So let me take this off and show you what, just by going through this, what I just realized. So chances are this is 1 2 and then a 1 2, and now we're in 3, and I would suspect this high over here. I'll look at these numbers here in a minute. I can't bring up numbers when I'm drawing on a screen like this. That we're gonna see the highs of the all-time highs here challenged. And it's a pretty explosive pattern. Now we're seeing the PPMs turn down, but they're turning down from a high level. Over on the far left here, you'll see 1.47, 1.17, and 0.48 on all of these. This is just a robust trend. I wish I had put it, maybe next week I'll put a camera up. I'll do a webcam or something. But there's a sign I used to do when we're on a trading floor, and I'll show you sometime. Maybe I'll do it on a nightly video. But it basically, when a market's in a trend, the moving averages spread out, and they have a very unique pattern that sets up, and this is it. Let me take this off for a second. What I'm talking about is you get these moving averages all spread out. This one's turning up, and these are very robust trends. This trend is likely to last for anywhere from this point here. It would be probably another minimum 21 to as long as around 36, 38 days in this pattern left. So there's quite a bit. If you just bought it here, different. If you bought it down here on 3.7 or anywhere down in this consolidation zone, then you're good to go if you like this trade. You could actually maybe hedge it up, buy some puts or something like that, just to protect the downside if you want to continue to hold it, put some protection on. But from the standpoint of this trend, it's big. I'm going to do one last thing. Let's look at the weekly chart. This should be quite revealing. I'll be honest with you, I have not looked at this stock prior to this, so this is interesting. Just got a weekly buy on Monday, so this is like I said, you're looking at PPM1 plus 105 on intermediate basis. On the far left here on these indicators, 0.41 and 0.29. So yeah, this stock's going higher. Okay, the moving averages are just starting to turn up. All three of these PPMs here are spiking. If the stock was down at 140, at 160 range and hadn't moved yet, this is a classic setup here from the standpoint of one of these, how the PPM set up. So when we took out the first derivatives on all of these, which let me draw that in, and then we'll finish this. I know I'm getting a little long tooth, but it's worth going through here. It's both useful and educational. So these PPMs right here I'm talking about are breaking through all their first and second derivative, which is the green and the cyan line. And when you see this kind of stuff, this is telling you an acceleration far left, 105, 0.41, 0.29. Anything over 0.25 is is a trend. If it's a negative, then it's a downtrend, positive, uptrend. And what it's telling us is that this market's not going anywhere anytime soon. So you're going to see the 10 period moving average start to go up. These things will start to go up, because what you've got here, if you're looking at moving averages, and that's what these indicators are running, the 10, 21, 40 period moving averages and the rate of changes of them. And what that tells you, once you go back wherever 40 days is, somewhere back here, wherever that price is, that's when you start to trade above that, which you are. Every day you trade above this, these indicators are showing some increase in the rate of change of those moving averages. So once they start to turn up, you'll see the trend. And I would just equate this going back and looking at, here's a good block. I'm just going to draw a block with these arrows around here. But this right here, this is exactly what I'm talking about, where you see all this stuff turn up in a pattern. And so you're going to get some sort of pattern. This thing will set up some sort of wedge pattern up here and continue to go higher. Yeah, Jinjin, Delta Airlines a good buy if you have a 2 or 3 year hold, probably. You know, I don't know how to think like that. Everything I do is intermediate, long term, and based off charts. But you know, I suspect that you're going to be able to own some of these stocks. I don't think they're going to let the majors go out of business, so there'll be something. There'll probably be a treasury, or somebody's going to come in and take an equity position. And there's been a lot of questions of people asking if they think the Fed is going to be buying equities. I don't think they will buy them in the form that, like in the Japanese way, where they bought all the ETFs up and supported the market. But I do think that Treasury and other folks are going to get involved with some of the key companies. There's been a lot of terms in this crisis, new terms and new concepts that are going to be driven in society, and essential businesses are one of them. And we've already heard those words quite a bit. And so what that's really telling us is that travel and airlines and those things are going to be essential businesses. So we'll have to watch and see what happens. But my guess is that at these prices, you're probably going to be okay in a long-term hold. Let's see if I can see anything else. Yeah, we've went probably a little bit over an hour. You guys have any last questions? I'm just looking through the timeline here a little bit. Cousin Cole, if you're still on there, can you talk more about the PPMs indicator and how you calculate and read them? They're proprietary indicators, but there is a video I did, and I'm gonna be doing another video on understanding wave tech, which is all about the stuff that we're talking about on the screens right now, on movements and moving averages and concepts and probabilities and things of that sort. So that'll be out there. But if you look in the timeline on the channel, you'll see that there is a video on the PPMs. I think it's only got about 1,000, 1,200 hits or something like that, but it definitely should be watched. And if you rewatch this, I went through a lot of little lessons from time to time as things happen there. Let's see here. Yeah, casinos. I just saw this. I think we're going to finish here. MGM. This is weekly. Let's go to a daily. Yeah, so interesting. Our models actually had a buy on MGM at 1290, just sold out of it actually today. Sold out at the open today. So it's flat right now, but these look like I suspect we could go through all the carnage in the industry, the airlines, uh, MGM, anything Vegas related, and then we could actually, everybody that's been drastically affected by the shutdown. And that's why the Nasdaq looks so good relative uh, to everything else, right? Is because the tech companies aren't reliant upon people getting on airplanes and going to Vegas and doing all the things uh, that are socially oriented in the society. So uh, let's take a look at the weekly real quick here on this stock. But I think all these, the cruise lines, all these guys are looking the same. This 10 period moving average coming down here is still at a minus 702. That's kind of the magnet. I've been talking about that even on the S&P. It's still kind of a drawing, but the S&P is starting to turn a little bit here, so we're starting to see some support. But this, from this standpoint here, is we're looking at uh, a ways away from bottoming. So I would say probably in the next 2 weeks or so, this chart will look a little better. I would watch the pattern from going back to the daily chart real quick. I'd watch how this sets up here. If it holds these moving averages, you can just put a 10-21 period moving average on here. And a few minutes ago, I was talking about this downtrend. This is how the markets look like in a big downtrend. They look the same way in a big uptrend, especially when you get this huge downward surge and you see all the PPMs, you see everything turn around when this stuff is coming into this little wedge shape here. So, but our there's a number of things within the models. There's pattern recognition, there's probabilities, there's a bunch of variables that come in there, and these are really short term. So we're in and out of GM. So, all right. Well, listen, folks, if you were on early, you know, if you're on early, sorry about the snafu at the beginning. I just saw a couple things. I just saw a few things that are on there. If you did buy some of these airlines, I will make sure I cover these um, and keep things in perspective there. Okay, so just make sure you comment on my daily videos and stuff, and um, just keep watching the videos, and I'll keep hearing and make comments so I can stay focused, and I'll try to answer you the best I can, folks. I really do try to read a lot of this. A couple of my other associates read through them, so we're constantly looking for stuff to go on. So pretty good. Not I appreciate we've got about 182 on here right now, so uh, I'm sure we'll get a lot of views afterwards. So this thing will repost. I think it takes like 20 or 30 minutes, so you can go and skim back through some of these areas I talked about today. But I'm really enjoying these these streams and um, everything. So we ran over quite a bit today because of where we started. So we got a little bit better in the hour end. So anyway, folks, thank you so much. Uh, keep watching our daily videos, and um, we'll continue. I'll continue to do my best to cover all the stuff that we need to be thinking about. Appreciate it, guys. Have a great day. We'll talk to you tonight on our daily commentary.